Thursday, August 29th. Market analysis, Stan Ehrlich. Good morning, 9:55 California time. We start out with stock market indexes, go to futures, and sometimes cycles, seasonals, forex, crypto, variety of other things. Today, we're just going to stick with indexes and futures, which most of the time we do. And I'll remind you, we're about to have a 3-day weekend. Markets are a little bit afraid of 3-day weekends. A lot of people, if the market's been going up, take profits because of the uncertainty over 3 days as opposed to 2. And if the market was going down, they tend to take profits or get out of potentially losing trades. So there are some unusual things that happen 1-2 days before the 3-day holiday, just to be on your toes for some significant activity potentially. Today, we do have, in some cases, an outside up day, a bullish engulfing, but it's not a buy signal. We're not oversold, nowhere near it, but it is disappointing. I definitely expected that the market was going to start to slip more. Yesterday, we had an official ER sell signal point blank on the E-mini, and it didn't work. ER3 took a couple of modest, not that small, but modest day trade losses, and then we're flat again. ER1 overnight, you'll see in just a moment, had for the scalp trades a profitable scalp yesterday, and the overnight version had its trailing stop come down substantially and got out of its trade near the low of the day. Actually, that was the ER1 scalp, and the ER1 overnight came down substantially and got out with a profit, but not quite as much because it tries to stay with trades longer periods of time. ER1 overnight means it tries to stay overnight, and there was too much of a break, then too much of a rally to allow the trade to stay, but both profitable. Today, we have the brand new ER3s getting hit right there. And unfortunately, it just basically went straight up and hit the stops in both cases. The three scalp did come down somewhat, the stop, and took a little bit less loss. And the other one got stopped out at its standard level. Ouch. Don't like this from a standpoint of the strategy results, but I do have a comment about my interpretation. We have a high today that's right smack in the ballpark of all the previous highs. Resistance. There is the chance, although I kind of doubt it, that this market will turn right around and go all the way back down below yesterday's close, in which case everything changes back to bearish because we would have a bearish engulfing and 1, 2, 3, within the appropriate amount of back days, we have been overbought. As a result, we're going to get another red bear signal only if it closes below yesterday's close. Now that means we got to go down about 50 points or so. And the spider would be approximately 5 points. Not likely, but we've got half a day left. Plus, well, that happens tomorrow, Friday, it probably nosedive even more, which is what I was hoping for today and tomorrow based on yesterday's reversal, which again, oops, didn't work. Hey, not all of them work. This buy signal back here, I didn't have much faith in, and watch what it did. It was fantastic. Huge profit. Then we ended up with 2 sell signals. Both of them didn't do too well. So next, and that's the E-mini 5-minute. This is a spider daily, right up against previous highs. From the standpoint of a traditional technical analysis technique, resistance, trying to build maybe a double top formation based on the highs that were created in overbought conditions back in middle of July. That created a pattern which did work within 2 days of the breakout. That was amazingly fast, amazingly fast. So that's come and gone. And frankly, I'm now going to finally remove that neckline, and I'll just diminish the opacity on this and make them very faint. But I do like the fact that that was a head and shoulder. and I'm going to do the same with the downside objective. I may even put the neckline back, but it'll make him very faint in the background. So modest, no, I'll rephrase that. Definite possible double top. All we have to do is start to see the darn thing trend lower. First thing is to get below yesterday's low and close below yesterday's low, and that should do the trick. Next chart is our 1 minute spider up against previous highs recently. Not quite new highs yet. I don't know. The trade that we had for the one scalp made money and got out on the close, and that was August 22. Great. The ER1 overnight held the trade throughout this losing small rally time frame, and finally yesterday dropped into profitable ground, pulling our protective stop down dramatically, and it got stopped out with a profit also. 2 profitable trades based on the signal from August 22nd. Yep, done and gone, past tense, waiting for a new one. We don't have a losing trade here. QQQ. We sold the top of the market to the exact day. This is depicting the ER3 position trade, got short right there, got out yesterday on that significant break into new low ground, and that's why I thought this market was going to continue to slide. It didn't, but we're flat yesterday. Took a profit. Today's rally is no big deal. We're not losing anything. We're not making anything either. But it's back up under resistance. And we did get the top day, and it's nowhere near the high of the highest day. So the NASDAQ, QQQ, and the NQ futures contract are working great. Here's the detail for the QQQ, minute by minute. ER3 rallied back to our trigger line right there, that little line, red line, got short. The scalp trade was losing along with the overnight at first, but didn't stop us out. Then a big break caused our stop to come down dramatically, and the scalp trade took a small profit, and we're flat on the scalp. The overnight trade stayed short for 1 day, 2 days, 3 days, and 4 days later, yesterday, it went down enough. Our stop dropped enough over the last previous, that is 4 days. We took a very nice 4-day or swing trade profit. We're flat. Let's see what happens next. But the NASDAQ is a little different. Futures. Buy signal basically on the bottom. Great trade to the upside, and got out on the day that we had the bearish engulfing on the NASDAQ, along with the QQQ, of course. The next day, we are getting short again. We are ER3 shorts, and they got out at this price yesterday. Now today, because this being, a 23 out of 24-hour market, got lower than all the lows for the last approximate 2 weeks. But we've come back all the way back up to slightly above yesterday's high, I believe. Yesterday's high being 91.00. Today's high is 93.50. Barely a couple of ticks, but higher. So it does have an outside update today, and it could have another sell signal if we get and close below yesterday's close. Not likely, but I've seen weirder things happen. 53 years in this business drawing charts. Next, NASDAQ September futures contract with the 5-minute chart. Here's our offset. Great. Dropping down substantially after that. Unfortunately, we didn't capture more money, but it was still a great trade. And remember, all of these are automatic. It doesn't matter what I think. These are coded algorithms. It's based on what my learnings have been over half a century. So did okay. Now, I still am bearish. I'm still looking for the market to top out. I'm still looking for all these markets to fail and start to head south in earnest. So far, every attempt has not had the follow through, except for the NASDAQ slightly, that I wanted. So the NASDAQ coming down nicely, more so than the other indexes, allowed me to have a good profitable trade on those trades. Okay, YM, daily data, sold the top of the market. We have a bearish engulfing ER signal on the exact high day. Don't try that at home alone. Nice trade for a few days afterwards. We're flat. Market popped back up, no new high. Then it went all the way back, and we're not in any trade, all the way back down, and we got a buy signal almost at the bottom, rode it up. That's the green line right there, and got out yesterday on the break of our long position. Now, we're just plain flat, no new trades. We do not add to a position. We never compound using profits for new trades. The track record is based solely on one contract for futures, one round lot for stocks, etc., at a time per signal. And the only way to get out of a trade with ER strategy, ER signals, is to get stopped out, not because there's a reverse signal. Okay, total new highs for the Dow Jones futures for the last, well, it's an all-time new historic high by a small amount, but it's an all-time new historic high. For the YM, I would think also for the dollar INDU, the Dow Jones itself, Dow Jones 30 cash. And here we go. Next is the Russell. Really don't care about the Russell too much. It is in resistance. It's trying to stop rallying. It's right up there at the top. It did have a couple of day break. We're coming back somewhat. It looks like there's a variety of reasons for it to stop rallying and start to turn down. The 1 minute chart just shows you the detail. And this is a 5 minute chart. For the last, I don't know, 3 weeks or so, we had a good trade back here, only lasted about 24 hours. Next, bonds are starting to do, in my opinion, what I was expecting. We now see today a new low for 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 days. I want us to stay here. I want it to close here. I want it to keep going down even more. My expectation is that it's going to go zigzagging sideways to lower slowly into this green circle, which is during October, and approximately a high of 119.5 to a low of about 1525. In the circle is where I expect a major turning point back up again to occur. I'm not used to making forecasts that last 2 or 3 months, but sometimes, and here we are. So let's see what happens. 10-year notes, same formation, same reasoning, just the price levels are different. Looking for a bottom in October. Please remember, for the stock market indexes, particularly the study was done on the SPY. Since 1993, there have been only 3 years, and that's over 30 years, that we have seen not a low worth buying in October. That means over 90% of the time since 1993, there has been a buying opportunity in October that has been either mild or spectacular. Some of the biggest, longest term lows have been in October. I can't stress that more. Next, crude. Well, we're beginning to get into this middle of this pennant formation. I am waiting for some signal and or a bullish or bearish breakout. Next, natural gas. Buy signal yesterday, told you at the time. A dip down in natural gas, didn't hit the stops, didn't make it lower low, came super close. You could have bought it down there if you're a little gutsy. Currently almost high and last, liking what I'm seeing, above yesterday's high. I'm hoping it's going to continue to rally more. Probably up to about 2.5, something like that, 2.5, maybe even 2.6. Next chart. Brand new today, now. Bullish engulfing in heating oil. That's an ER official buy signal. Turn the price green. Now, we are long close to the high of today because it just barely got above yesterday's high, and that's our new long buy stop under these conditions. Momentarily, we have a small loss. We'll see how this trade works out, but it's a brand new buy signal in heating oil. Now, I'll reiterate, natural gas had a buy signal that's doing okay. Today, heating oil got a buy signal that's doing okay. The only one that didn't was crude, and it's in a sideways trading range. So going back, now we're looking at gold. Sell signal yesterday not doing too darn well at all. Hasn't gotten stopped out, but it's losing some money. I'm hoping it's going to flip-flop right back down again and start to make new lows lower than yesterday's low and on a closing basis without any highs, without stopping us out, and that would be great news. Now, if you had the fortitude to do this, if you sold short here, in following my stop at 25.6380, let's call it 25.64, maybe even a hair higher, your risk would be relatively small, but it's a gutsy trade. But my system is already short from yesterday, and I have no reason to believe at this point, it's just getting close, that the signal is going to turn out to be bad. It might, but your opportunity right now is a lot better than the strategy got into the trade. You know that sometimes these sell signals immediately start to go straight down big time, and you never get the chance to do this. It does not really mean to me that it's likely to fail just because it rallied up this way. Silver, we're also rallying a little, but only back into around the middle of yesterday's range. And the head and shoulder top in this case is still in force. I am looking for a minimum downside objective, if not more, of 24.5, based on, at this point, the December contract. We bought it at the bottom of the break. It only lasted a couple of days. We got another buy signal. The strategy got bumped out, but you know, you can handle these signals any way you please. I just have an algorithm that I've built over a decade of work that does what it does. So, a couple of small short-term trades, nothing holding on at this point, and I think it's topping out now. I don't have any brand new sell signals. We didn't get actually overbought. Too bad. No yellow in here. When you turn yellow, you get overbought like that because RSI gets above 75 like that. We didn't do it in the last couple of weeks, so no yellow. Next, also no yellow in platinum, but platinum is trying to break into the support area. Yesterday got down to it and stopped right at it. Today it stopped right at it and it's bouncing a little bit, rallying slightly. Nothing major, nothing consequential in my opinion. I'm expecting support to be challenged again below the market and broken, and my minimum downside objective is 808. Next, buy signals in copper worked nicely, but yesterday it went down enough to hit our stop. Great trade, approximately 2 weeks for the ER1 overnight trade. Couple other trades. I see one of them lost a little tiny bit here on the overnight ER1 from the first buy signal, which was basically close to the bottom of the market. There's a variety of ways to use these signals, not necessarily my automated trading system. Next, buy signal a couple of days ago, doing fine, but the system took a profit already, and that was yesterday. Now I can change the speed of the stop, and I do sometimes, but when I do, I tell you that I did it so that you know. And here we're using the defaults. It made money. I kind of wish we were still long, obviously, because we're making new highs for the last 3 weeks since the buy signal occurred. This looks like I'm still bullish. I have to be, even though I'm not in the trade. That's my opinion. And we should be going up to about 1017-ish and maybe up to 1036. Next. Now we've got, that was soybeans, by the way. And I want to make a comment about soybeans. Grains are starting to look a little more bullish, but not major bullish bottom long-term formations. I can't expect more than a short-term 1, 2, 3 week rally and then back down again. I just don't have the data, the information, the symbols. I meant the signals and the formations and the time frames. So we're going to rally in beans again, 1014 and maybe a little higher. Oil, soybean oil, took off like a rocket today. Great But yesterday, it went down enough to stop us out of our trade with a small profit. Again, a profit. But if I had slowed down the stop movement and not left it as a default, we would probably, again, changing the stop to a slower movement, still be long. And depending on your style of trading, it's kind of like, but not, and I don't like moving averages, not a moving average. So, a larger moving average moves slower, but it generally risks more. But you can sometimes take bigger profits. So the concept is the same, but I don't like moving averages. And we made a profit. How about soybean meal? Rallying, almost made a new high for the last couple of weeks, not quite. We didn't get a buy signal at the bottom, only oversold and in support, turned the market up. So I'm a little more friendly, but again, I got nothing here that says it's going to turn into a bull market. This is still, in my opinion, a sideways to bearish trend, and it's the only one that's not convincingly bearish. If you look at corn, wow, new lows for many, many months. Long-term bear trend, buy signals that didn't work, 3 of them. Now we're trying to rally. Maybe we'll get back up to 418, and I can't rule out 480, 448. That's a pretty good rally, but not spectacular, and it's not going to change the trend intermediate to long term, only very short term. So short term may be friendly here in grain, looking like it's starting to come around. Wheat, same thing. We did get a buy signal 2 days ago on the bottom day. Green RSI, oversold for 3 days prior. Now we're starting to see new highs a couple of days after the buy signal. Again, some modest bullish activity going on here. The rally's already been up to my first resistance, but I'm thinking that we're going to get follow through and get up to approximately 580. Next, cattle. Buy signal worked past tense, great. We made a profit, took 3 days. We got bumped out almost exactly where we are right now, a little bit earlier today. And it's a great trade. So we're flat, and I think this could rally a little bit more, but maybe not, because we have been making lower lows and lower highs for a couple of months. We do have a double top, although that was fulfilled a few days ago on the minimum downside objective of 174.5. So that's come and gone. That worked great. And that was an opinion trade, a formation trade opinion, and not a strategy, because we didn't get a sell signal, unfortunately, at the high there or in there. But the buy signal down here has worked a little, and there was another one that worked slightly. So the last couple of signals on the algorithm made some money. Next, Miss Piggy. Overbought, probably should stop this market from rallying more. And I'm looking for a dip down to about 79 and a quarter. And I can't rule out something down to 76 and a half. But a minor dip. Let's see how the market handles a minor dip, because I'm not convinced about the longer term trend here. Back to the E-mini for a moment. Let's look at the short term 1 minute chart. Starting to slip some. Remember my initial comments. Double top possibilities, overbought situations, signals algorithms didn't work out quite what I wanted on the average on the indexes. I still think they're in the process of rolling over and topping out for the indexes. You have a great trade. You have a great day and trade. Remember, tomorrow's Friday in front of a 3-day weekend. Profitable trading to you. Bye-bye.